Good morning and welcome to another edition of Business Morning. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Thank you for joining us. Let's look at what's in the news. Nigeria's inflation rate is continuing to trend downwards. Data out this morning from the National Bureau of Statistics shows inflation declined to 17.01% year-on-year in August 2021. And this is at 0.37% percentage points lower than the rate recorded in July 2021, which is about 17.38%. On a month-to-month basis, the headline index increased by 1.02% in August 2021, and this is a 0.09 percentage change in rate higher than the rate recorded in July 2021. The composite food index declined to 20.30% in August 2021, compared to 21.03% in July 2021. On a month-to-month basis, a food sub-index increased to 1.06% in August, up by 0.20 percentage points from 0.86% recorded in July 2021.
And core inflation stood at 13.41% in August 2021, down by 0.31% when compared with 13.72% recorded in July. On a month-on-month basis, the core sub-index declined to 0.77% in the month under review, down by 0.54% when compared with the previous month. Okay, let's bring in now the CEO of Financial Derivatives Company, Mr. Bismarck Rewani, to weigh into this. Good morning, Mr. Rewani. Thank you for joining us this morning.
Good morning.
Good morning, and thank you for having me.
Now, you and your team had projected a decline of 16.8% for August inflation. However, we're seeing a slight decline on the rate. It looks like the rate of decline is slowing. Are we getting to that point where we will probably see the rates climb again?
Yes, you're right. Actually, we are approaching what we call the point of inflection. In other words, we are seeing the rate of inflation actually decelerate. And it points to one thing. Clearly, the pass-through effect of an exchange rate mechanism and impact of some form of rationing means that manufacturers are actually getting only maybe between 10 and 15% of what they require from official sources and having to source the balance from autonomous sources. And that is putting pressure. Also, we have the Christmas effect. People are now beginning to buy inventory ahead of Christmas. And so that is having a direct impact on price levels. Having said that, we must understand that there's also price resistance by consumers who are weary, who have income constraints. So you see that and you look at it, but very, very significant is the fact that the month-to-month inflation increased, which means that when you compare the price of a product which you bought last month with the product which you bought this month, it has increased. What you have as headline inflation is comparison with last year. Well, last year is a long time ago. So it tells you that in the month of September, we are likely to see a reversal of this. And this will impact directly on the decisions that are going to be made maybe by the end of this week.
All right, Mr. Ronnie, thank you so much for that. We'll discuss this matter by tomorrow on our Commodities Market Update. Thank you so much for coming on the program this morning.
Thank you for having me.
All right, after the break, taxes, levies, and as well as overregulation by government agencies are some of the challenges manufacturers say they face in doing their business in Nigeria. Well, we'll have this conversation with the MD CEO, Coleman Wires and Cable, Mr. George Onafowokan, next in a moment. This is Business Morning. You stay with us.
In the Manufacturers' Confidence Index for Q2 2021 recently released, majority of the respondents agreed that multiple and overregulation by government agencies have depressing effects on manufacturing productivity. We saw the real GDP growth rate in the manufacturing sector in the second quarter of this year, up 3.49% year-on-year, higher than the same a quarter in 2020. Well, joining us to paint a clearer picture on the happenings in the sector is the MD CEO, Coleman Wires and Cable, Mr. George Onafowokan. Thank you very much, Mr. Onafowokan, for joining us.
Good morning. Good to have you.
Well, I guess we have to start off this conversation with the data just released this morning, talking about inflation. That I mean, it affects you too, and some of you manufacturers are the ones perhaps adding the prices. Maybe, I mean, we listened to Mr. Rwane there talk about the exchange rate pass-through effect, and I know that talking about this exchange rate, you manufacturers are part of, perhaps, will I call you the culprit?
Oh, I think that's unfortunately it looks like that, but we're not really. For whatever industry that anybody is in manufacturing, the critical part of any business is survival. Survival means you must be able to work within certain cost of production. Now, if those costs start changing because of the pass-through of what today is FX in the last couple of weeks, then it's either whether your product is inelastic or elastic to determine. If it's inelastic, it's easy for you to pass through those costs. And those would signify impact on inflationary indexes immediately. And I'll say in most of the cases, most of the products manufactured in Nigeria are inelastic, majority of them. And when you look at that, so you see the impact instantly on the inflationary indexes. Now, for me, what he said is right. It's unfortunate, like in the last 3-4 weeks or 5 weeks, we've seen Naira devalue from a unofficial index of about 500 to 1 to about today. I think as of the last count, I was seeing 560. Yeah, now, that is scary. Now, for any manufacturer, and one thing I've argued, I think in the last EPC meeting of the Manufacturers Association, my argument was, look, let's stop talking about getting Forex for raw material again. We're not getting it. Everybody, from what I see, has already benchmarked its Forex against the unofficial positions. Now,
so, but even after the last pronunciation by the central bank at the MPC, stopping the issuance of Forex to the BDC and, of course, encouraging both manufacturers and individuals to go to the banks, are you saying that you guys still find it difficult assessing Forex in the banks? Because there are some people are saying that some manufacturers get this Forex and they are hoarding it. And that's part of the problem in the system.
It might be possible. This is Nigeria. We can't say nothing is impossible. Some people take advantage of this system. They take advantage of structures. Now, but irrespective of that, the majority are not. Now, but the majority are not benefiting. When you look at it, I'm in a situation where we've been doing expansion work for the past 1 year. And we're doing the first fiber optic cable factory, the first in Nigeria now. And when you look at the FX, I have not been able to get FX. For the past 1 year, and the project is almost completed. Now, but you look at it, how did I get the Forex? It's impacting the bottom lines. And that's the reality. Even for the manufacturing plants that you want to buy, you can't get the FX. So forget the raw material. So if I can't even get the FX to buy the machinery that I'm going to use to create jobs, forget the FX for the raw materials. So the critical part, really, and I said, in my own view, we know the answer and we know the solution. But for me, there's no political will to do it.
But with this raw material issue, is there, any solution for that?
I said we know the solution. Now, I have proposed a solution, and I've argued this with a lot of bankers and people in the finance industry. I said, look, and indirectly, even Mr. Rwane has said it some time back, we need to bite the bullet. Now, the reality of this bullet is that this FX is speculative. It's enhanced by we being afraid of the next day, and we are front-loading. Now, how do you stop that? It's very simple. Decide to take everybody on. And this is how I say they should take it on. Today, you have a backlog of FX. And we have people also front-loading. The way you can stop it is to put the hammer on everybody at the same time. CBN has done it before in 2016. We need to sell forward all this money. Don't bother about what the situation is. CBN has to bite the bullet and say, everybody collect your money in 90 days, and I'm selling you $4 billion in forwards. Now, what happens with that is 2 things happen instantaneously. You sell a forward at $4 billion. You remove forwards of Naira instantly of $4 billion. If you drain the system of $4 billion, believe me, we'll have liquidity issues. Nobody will front load any money. Now, but in 90 days' time, all of us will get the money. Now, to avoid round tripping is the reason why you are forward loading that money to them. You're not giving them instantly that $3 billion. So nobody really has $3 billion in their hand. But they've all lost $3 billion in equivalent in Naira. So you've created the crunch in liquidity that will ease this problem. You've given guarantees to everybody in the future you're going to get your $3 billion. We solve the problem of front loading. It will ease the tension. Now, for me, I think the problem is we all just don't have that political will to do it because the consequences, they are instantaneous consequences. You create a $3 billion equivalent in Naira liquidity crunch. You would most likely have an impact on inflation and interest rates instantaneously. Right. That will be temporary.
Okay, let's not just dwell so much on the issue of this Forex. Now, we saw that manufacturers released their CEO confidence index. Well, it seemed to have looking good, but then there are some issues that were pointed out aside from the FX issues. There's taxes, issues of taxes and over, regulations. How do these play into your business?
It is. Now, the issue of taxes, especially the issue of VAT that is now coming on, is really scaring every manufacturer on how to do businesses, especially those that have businesses beyond their regions. So you have someone doing business in Lagos State and having depots in Port Harcourt, in Abuja. Now, my question was the case of where do we start talking about the input and the output tax involvement? Right. So,
because that might just create some kind of multiple taxation.
It is going to end up until I think what has to happen is the federal government and the state must come to an agreement on how this is collected and who collects it. I think it's better if one person still collects it, but who owns it, owns it. I think I was watching one of this, the person that initiated VAT. He said, look, the whole point of the initiation of VAT was that the states that actually initiated it, that generated it, should collect it like a sales tax. But there should be a 5% fee for helping them collect it. And I think that's what the federal government should just get involved.
But do we don't really operate the sales tax system. I think that was stopped for a long time.
Correct.
And then
VAT took over.
Now, is it that they have to go back to that sales tax system where the states would have to, and then if that happens, every state would have to pay their own tax. So you probably get to Lagos, you're paying more tax than whoever that is perhaps in Imo State.
I don't think the way forward is to actually go back to sales tax issues. We can definitely operate the VAT issues continuously. Now, the key thing is that there's no state that doesn't know the amount of VAT that is collected. Everybody knows. The key question is, since I know how much is being collected and I accept a fee for you to just deduct out of it and return my money, then it's fair. Then it will still be handled by the FRS, but then on a basis of fee only. And I think that will calm a lot of things down and we can move forward. There will be no need for sales tax. Everybody will know that the VAT generated from anywhere, irrespective as it's collected nationally, you know your input, you know your output tax, you can actually move on businesses.
And there's still another, the proposal for excise duty on carbonated drinks.
And here we are talking about inflation numbers that is still on double digits.
If I have to speak on the behalf of manufacturers, and I've been an ESCO member of MAN, we need to be careful as a country. We need to be careful as a government. We need to be careful as states, even as local government. The drive for IGR, internal generated revenue, it's sometimes overdriven to the point it's counterproductive. Now, for whatever they're trying to do on the beverages, yes, the beverages for Nigeria, in sincerity, are actually a better growing industry than most of them. Now, the investment in that sector has been increasing over the years massively, even especially by Nigerians in the actor today. You have so many drinks available in the beverage industry. But we don't want to grow something and do it well. I've been to Ghana and I looked at the beverage. I went to a supermarket and you could say 99% of what was there is imported. Today in Nigeria, if you go into a supermarket, 99% is made in Nigeria. And we're all very proud of drinking made in Nigeria now. I don't think we need to drive IGR at the cost of businesses and employment and creating jobs. I think that they need to kill that idea instantaneously. We are just coming out of COVID. For most of the industry, I don't think they've come back to normality yet. So driving IGR by killing the businesses that have managed to survive 2 years of COVID, I don't think is
so
the
it
right
can be done, but it's about time.
It can be done. It's not the time for it yet. We need to first get this economy back into a level of growth that we can all say it's creating the employment and generation of jobs to standardize. We looking for more IGR, not immediately.
All right, let's look at the issue of the MPC, of course, meeting this week. That should be on Friday. And then from the manufacturer's perspective, what are you hoping to hear this time?
You know, there's always two flips to every side of the coin when it comes to APC meeting. I think for our side, we'll always want interest rate and all the indexes left as it is. On the other side, you have the economics on the other side telling us that there's an imbalance between interest rate and inflation. We all understand that. But look, I have to be a bit selfish here. I'm a manufacturer.
But even with interest rates out where it is now, are you getting, I mean, there are some people saying that even at that, manufacturers are still getting their funds at higher interest rate, 22%?
I don't believe so. Anybody getting 22%, look, in any business, there's risk calculations. If your business is very risky and I want to borrow you high-risk lending, of course I'll borrow you at 22. If your manufacturing business is not high risk today, you shouldn't be at lending rate more than 14, 15, 16. That is the reality. Maximum 18. I do not see anybody at 22. Now, so anybody saying 22, we need to ask them the question, what they're doing
What
as
exactly
a business.
Anyway, thank you very much. Time is never our friend, but we have to leave this conversation here and keep talking about it. Thank you very much.
Thank you so much.
Thank you very much for having me.
Okay, we'll take a break. When we come back, FX Commodities Market Update is next. Just stay with us.
And now for the FX Commodities update. The FX market, the week ended September 13th, saw the total value traded up by 34.95 factors. Number of contracts and deals were also up from the previous week. We have Michael Martin, portfolio manager at FX, to tell us more. Great to have you, Michael. First, bring us up to speed with activities in the market for the week under review.
Thank you very much, Ladi. It is always a pleasure to be here. So just to give you a summary of what happened on the exchange in the week under review, the total value of transactions traded on the exchange went up by a factor of 34.95, from 102 million to close to trading week at 3.67 billion. The total number of contracts traded on the exchange also went up by a factor of 50.76, from 3,569 contracts to close to trading week at over 184,000 contracts. The total number of deals also went up slightly by 5.88%, from 17 deals last week to close to trading week at 18 deals. The AFEX Commodities Index, which is the ACI, remained unchanged at 427.34 points. And the AFEX Export Index, which is the AEI, also remained unchanged at 168.08 points. With regards to the volume of contracts traded on the exchange in the week under review, there was a general increase across board, with the major corporates being Maize, which traded up from 45 contracts to close to trading week at 184,404 contracts. We, however, saw a massive decline in the volume of contracts traded for soybean, which traded from 2,225 contracts last week to close to trading week at just 299 contracts. There was little to no volume traded across board for the remaining commodities on the exchange. With regards to the price changes on the exchange, we generally saw a decline, with the major corporate being cocoa, which fell by 6.56%, losing 6,402 naira in the contract value, to close the trading week at 97,637 naira per contract. We also saw a decline in the price of paddy rice, which fell by 3.95%, losing 877 naira in the contract value to close the trading week at 21,318 naira per contract. And last but certainly not least, we saw a decline in the price of soybean, which fell by 1.76%, losing 611 naira in the contract values to close the trading week at 34,053 naira per contract. And so that's by and large all of what happened on the exchange in the week on the review. And as we always say, if you want to know more about the commodities market, you can go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can always download our app, which is available on iOS and also on Android.
All right, Michael. Well, just this morning, the NBS released the August inflation data, and it still shows, of course, inflation is still trending downwards, albeit at a slower pace. And we have seen food inflation trending lower. What's the correlation? I mean, how do you link this data to what your activities at the exchange?
So thank you very much, Chimeze, for that question. I think the inflation data is representative of what is currently going on in the commodities market. As represented in the data I just presented a couple of minutes ago, commodity prices are generally falling across board. I believe it was the same scenario that we saw play out last week and even in recent weeks. So I believe a lot of that is also currently being reflected in the inflation numbers that we are seeing, with the inflation numbers tapering to close for this month at 17.04%. I think that trend will generally continue for the coming months, and like I said, that's symptomatic of what we currently have playing out in the commodities market.
All right, Michael, we know there isn't a lot going on in the local commodities market, but can you give us an overview of what's happening in international market, especially as it concerns grains?
So thank you very much, Ladi. So in recent months, so according to a USDA report, particularly for the month of July, it was indicated that there might be a bit of an issue with the production numbers, particularly for this year. And that's partly due to the fact that we have had droughts and wildfires in the western part of the United States. So what this essentially caused in the market was that it essentially caused a rally in the price of corn and soybean futures. It is also the case that we have seen flooding in major parts of Europe, which have also affected the price of wheat futures in the commodities futures market. But recent reports, particularly with the one that we had in the month of September, which ideally indicates all of what happened in the month of August, indicated that due to an increase in the number of hectareage cultivated this season, that might serve to temper the effect of the price rally that we have seen in recent months. So generally, those are some of the price dynamics that we have seen play out in the international market over recent months.
Now, well, back here, we have seen a major challenge in the foreign exchange market. Currently, we're seeing what is happening at the parallel market with the Naira declining further. So how are the players in your market trading this recent development in the currency market?
So thank you very much for that question. And I think your question is particularly important. But I believe it's also the case that due to the fact that the commodities market is not currently in season, we are not seeing a lot of that effect on commodity prices. Where we might be seeing a lot of that effect is with the onset of the new commodity season. So the current exchange rate might indicate to a large extent where prices would be more than willing to start from when commodities are eventually harvested into the market. So we are looking. We don't particularly know yet. We can't say by any definitive measure what the effect of the exchange rate is going to be. We would have to wait for the production numbers and then look at how prices start at the beginning of the season to just sort of estimate how far prices would go over the entire commodity season. With regards to the players within the commodities value chain, we have mentioned how there is a strong correlation between the exchange rate and also prices on the commodities market. And I think right now it's incumbent on them to really plan out their procurement over the course of the entire commodity season and essentially take advantage of commodity prices when they are at their lowest, which is what ideally they should be doing in any given commodity season. But I think it's far more important for this commodity season than any other due to what is going on in the exchange rate market.
All right, Michael, thank you so much for that update. Now we'll be heading on to our next conversation, still on the AFEX market. Meanwhile, acute food insecurity has been on the increase. Nearly 750 million people worldwide were food insecure in 2019, and at least 121 million people were moved into similar risk categories as a result of the COVID-19 pandemic. This number is predicted to rise as a result of the effect of climate change on global food systems and crop production. Without adaptation, climate change might reduce agricultural yields by 5 to 30% globally by 2050. And if declining supplies result in price increases, at least 50 million additional people could face food insecurity. A viable commodities exchange may be critical in assisting smallholder farmers in adapting to and mitigating, some of the impacts, enabling them to make educated decisions and adjust conventional practices to reduce losses. So we have Oluwafuto Olasimo, Vice President, FX Financial Market, to give us more details on that. Great to have you on the program. Good morning.
Good to be here.
Good morning.
How's it going?
Very well, thank you.
Great.
Yeah, so, what are the main challenges in Nigeria as regards, access to finance, price discovery, and, storage for smallholder farmers? These are, constraints, at the moment, but how can your, exchange help, providing solutions for these problems?
Okay, so thank you very much for the question. And again, it's always a pleasure coming on the program. Let me start by saying that commodities exchanges have proven to be effective institutional mechanism for enhancing the efficiency and the competitiveness within the agricultural space. Having said that, a number of challenges faced by smallholder farmers that commodities exchanges like FX would typically address or help resolve would be number one, price discovery. Price discovery pretty much talk about the market prices of commodities in response to demand and supply dynamics. Without a commodities exchange, most smallholder farmers are pretty much exposed to middlemen, and they are forced to sell because of desperation for cash, because that is the only means of livelihood that they have. But with a commodities exchange in place, it creates a marketplace for the smallholder farmers, and the smallholder farmer is able to get fair value for their produce, and they are better off for it at the end of the day. There's also the risk perspective. Again, we can't overemphasize the perceived risk inherent in agriculture. Right. A commodities exchange help to de-risk that sector by creating and introducing innovative products like derivatives.
And there's also an issue right now with cocoa, with high, rainfall in some parts of Nigeria. How can your exchange actually help with this kind of situation?
So again, when you talk about it's a ripple effect kind of issue. It's not something that started now. When you talk of this cocoa issue, there's storage, there's access to market, there's also how are the qualities of this cocoa that are presented to the market. What the exchange helps to do is to ensure that, number one, these right standards are produced, and then they match the buyers to the sellers, and then they're able to get fair value for their exchanges. And for smallholder farmers who are not looking at selling in the immediate, the exchange can provide storage facilities for them, thereby allowing them convert their cocoa from physical commodities into electronic warehouse receipts, and then they can hold for when they feel that it's a decent time for them to sell, and they can, of course, get better return for their investment.
Okay, let's look at the country's entire, food security issue. I mean, we know Nigeria in particular, okay, we know the issues we have when we talk about food security or food insecurity, the flood issues, the insecurity in the country. Yeah. Now, how important is it to develop a commodity exchange in helping with dealing with that?
So again, the commodities exchange is really important. If you look at the contribution of agriculture to the GDP and to the growth of the economy, you would see that we currently contribute about a quarter to the general GDP. Without the commodities exchange, what the commodities exchange essentially do is to help coordinate the largely fragmented agricultural sector that we have. I talked about creating innovative products that de-risk the market, and some of them are the derivative instrument. Derivatives are price management tool that producers and processors of commodities can use in hedging their prices. When they're able to buy into derivative products, it helps with their planning, it helps with cost of procurement, it helps even the profitability of their bottom line. And of course, I talked earlier about the price discovery. A lot of times, the middlemen that play in the commodities market do not really add much value to the value chain. So a commodities exchange in place would ensure that there's fair value across all the players within the industry. In addition to that, most of the smallholder farmers are not within an integrated value chain, and that exposes a lot of them to losses, to not being post-harvest losses, and not, of course, getting the best value for their produce. A commodities exchange is able to bring all these smallholder farmers who make up about 90% of the food being produced in the country. Bringing them within that ecosystem would ensure that once they get fair value for their produce, there's incentive to go back the next season and produce more. There's also market data. Market data is very critical. A lot of reason why agri sector is not getting the much needed fund is because people don't know what's going on. They don't know what's the volume being produced, what's the volume being traded, what is the yield, what are the returns. With the commodities exchange, you can have access to data. Investors who are interested in diversifying their portfolio can then take an holistic look at that data and then make informed decision. And then you can have that much needed fund that is within the financial market flow to the commodities market. And of course, it would result in development of infrastructures. Right. And again, you can't run an effective commodities exchange without storage infrastructures, without proper road networks to connect the farmers from where they are producing the commodities to where they would eventually store them and to where the off-takers will ultimately pick the commodities from. So again, market data is very important. It is important we develop the commodities exchange for the sake of market data, for the sake of price discovery, for the sake of de-risking the sector, and even from a policy and regulatory perspective. If the government is going to bring in an intervention, how would they know which sector or which subsector of the agri space needs the intervention? How would they know what volume? Government have been doing a lot in rice, but rice is not the only commodities. So it's just due to lack of a functional commodities exchange. But again, with the advent of FS coming into place, we're seeing a number of these challenges go away. And over time, the space will be more competitive. At the end of the day, the final consumer is better off for it because you are then able to pay lesser for the food you're consuming.
All right.
All right.
Thank you very much for your time with us today. Time is not always our friend, basically. Yeah. Okay, we take a moment. We'll be back.
All right, now let's take a look at what's happening in the market with Anyete Edet. Anyete, good to have you.
Yes, good morning, Ladi. Yeah, let me bring you up to speed with the fixed income market. We're going to start first with the bonds market at the trading at the FMDQ exchange, where we had a kind of a bearish trading at the fixed income market for the bonds there. Of course, there was demand, the average yield at the short and the long, as well as the mid segments, you know, the average yield there expanded. Of course, total number of deals there that we had is 40. Then if you move over to the treasury bills market, it was bullish, particularly because there was a demand for the 16 days to month, as well as the 121 days to month bills. And then, of course, it was flat at the long end. So, but because the inflation numbers just came out now, just early today from the National Bureau of Statistics, which tapered down. So now we're going to have our caller, Chioma Udu, a fixed income trader, to tell us what impact this is going to have at the fixed income market. Thank you for joining us, Chioma. Hello, good morning, Chioma.
Hello, good morning. Thank you for having me.
Yeah, pleasure. Now, of course, I'm sure you're aware that the National Bureau of Statistics has released the August inflation report, which came not close to what analysts had expected, analysts at Cordus had expected 16.95%, but it came down by 0.37% at 17.01%, in contrast to what it had in July at 17.38%. So what impact is this going to have on investor sentiment, especially when you consider that you know, the uncertainty created by higher Treasury bills stop rates?
Well, what I think for every investor is that they want a higher return or a valuable return on their investment. For today, we're looking at what I'm looking at today is market liquidity and sentiment from the last auction, where yields jumped from 6.8 to 7.2. In the market, we don't have a lot of liquidity. The market is up about 10 billion, and we have seen investor bias recently in the market where it's been bullish, it's been bearish. They've been selling so that they can reinvest in the higher yielding assets, which may occur today. So we expect that at this auction today, we're going to see investors trying to bid higher and try to get higher yielding rates at today's auction, NTD auction.
Okay, so now with that aside, we're also going to have, of course, the Central Bank's Monetary Policy Committee meeting starting tomorrow, as well as a primary market auction where we expect that the CBN, the Central Bank, will be rolling over 161.79 billion naira worth of instruments at its primary market auction. So is this also going to have an impact on the market in general, as well as maybe change in investors' view towards the fixed income markets?
Well, I think for us in the market, the bias now that rates are going to trend up, no matter what happens at MPC. So we've already seen that play at the secondary market transactions happening, where we've seen a bearish bias. They've been selling across the yield curve, and rates have generally trended up. So then at the PMA today, CBN is offering about 155 billion, and DMO, I beg your pardon, is offering about 155 billion, and we have more of the volumes at the 1 year maturity. We expect that rates are going to trend up. We expect improvement of rates, especially at the 1 year tenor.
Okay, so Chairman, we'll keep our eyes out on that, and of course into Thursday's trading session when the Central Bank's Monetary Policy Committee begins their meeting. Thank you, Chairman.
Thank you very much.
Okay, so now let's move over. That's the Central Bank's special bills, the 29th of November 2021. Number of deals there carried out there, about 11, worth 29.30 billion naira. Now over to the equities markets. It regained some of the losses recorded on Monday. Of course, this is what we had, 0.01%, which translates to about 3 billion naira in value. And of course, the sectoral performance, quite a mixed picture there, as well as the volume of transaction. But we'll look out for how midweek trading session pans out for the equities markets.
All right, Anita, thank you for that update. Countdown to the MPC meeting starting tomorrow. All right, we'll take another quick break now. We'll come back. We head to London. Do stay with us. This is Business Minute.
Okay, let's cross over to London now. We have Juliana. Good morning, Juliana. We're starting off this morning on data front. UK inflation coming in up 3.2% in August from 2% in July. That's the highest rate since March 2012, coming a day after inflation across the U.S. economy eased in August from July's 13-year high. How is this data being pieced together in London?
Yeah, good morning, Chimese. Well, when it comes to inflation, transitory appears to be the term that central bank governors across the world have used, but whether or not it is temporary or not, I believe this data is certainly going to be a lot of food for thought when the Bank of England Monetary Policy Committee meet next week, Thursday, to discuss rates and quantitative easing. At last month's meet, about 4 of the 9 Bank of England committee policy members were already saying that interest rates should be hiked. And then we've got this 3.2%. As you said, this is the biggest rate on record since March 2012, so much higher. If you think of the jump, a 1.2% jump is absolutely enormous. Some of the upward trajectories where they're coming from include food, drink, hotel costs. But some economists are saying, you know, don't be afraid, don't be alarmed. Of course, this is year-on-year data. And if we go back this time last year, Chimmy, we were talking a lot about Rishi Chancellor's Eat Out to Help Out scheme, where we were just coming out of the first lockdown, lots of restaurants trying to get people back into their restaurants. We're offering mega discounts for people to come and eat with their families. And that's one of the reasons why it is so high this month, because we are comparing it to last year. And those discounts just don't apply. We spoke yesterday, didn't we, about supermarkets and prices getting really high on the shop floor. No more buy one, get one free. So, yes, it could be transitory, but 3.2%, much, much higher than the Bank of England's benchmark rate of 2%. So, yes, lots of concerns, which is why the FTSE 100 went swiftly into the red after this announcement.
Well, I guess we'll get more details of that later. Anyway, Rishi Sunak has given his blessing to a multi-billion-pound trend that has seen foreign private equity firms snap up British businesses, describing the buying spree as good news for the economy. Now, we've had Morrison's being the latest, edging closer to £7 billion takeover by the US private equity group. Now, the Chancellor sees this trend as a sign of confidence in the UK, but is that what the market think?
Haven't really. It's not really touched the square mile yet, but it's a big news story this year alone. US private equity firms have shed about £25 billion into British business. You know, this is a welcome move by the Chancellor. He wants as much money in the capital as he can get, especially post-Brexit. We kind of are losing our top status to the likes of Amsterdam, Paris and Frankfurt. So he thinks this is good news. As you said, Morrison's is just one of many. There's a big row at the moment about NVIDIA, the US technology chip maker. They want to buy ARM, which is a British-based chip maker. We've already had Asda earlier this year, and we are going to expect more. There were some concerns about Britain's competitiveness and whether or not, you know, people's jobs are going to be lost or what's going to happen to the firms after. But the Chancellor did seem to dismiss that, and I believe this is part of his broader strategy to try and make London a more attractive.
Well, I guess technology is at it again. Network is at it again. Well, we'll talk more to Juliana later this afternoon. All right, let's move over now to the crypto market with Ladi. Hello, Ladi.
Hello,
what do we
Jimmy.
have there?
Yeah, the market is looking quite good. The bulls are looking to take advantage this morning. The market is green with Bitcoin reclaiming the 47,000 level. Ethereum at 3,003. It's looking quite good. The fear greed index, we have neutral. So it's not a fearful market. It's not a greedy market. It's in the middle there, neutral at 49 points. Market cap gained about $6 billion, up 2.61% this morning. 24-hour volume, $109.18 billion, up 18.80%. Bitcoin dominance, C41.65%. The price Bitcoin at 8 a.m. was 46,997. 24-hour volume traded this morning, $33.91 billion. See Ethereum still below that $44,000 levels. Not been able to reclaim that yet with the 24-hour volume of $18.15 billion. Looking at the top odds on my caps, quite mixed there with BNB claiming back $18 this morning. It's $418 now, up about 4.63%. Good move there for BNB. The Binance coin there, Cardano, $2.38. It's down about 36 basis points. Solana did have an incredible run. Last month, it was trading at about $58 per coin. It's now trading at $163. An incredible run for Solana there, but it did have a breach on their a blockchain yesterday. I'm going to talk more about that later. It's down 56 basis points. XRP, $1.09, up 1.37%. Let's bring in Solomon Amunde now, digital market analyst. Great to have you, Solomon. Good morning.
Good morning, Laddie. Good morning.
Yeah, so yesterday I heard Solana transactions paused for about 5 hours. People couldn't transact on their platform. I know Solana has had an incredible run this season. What happened yesterday?
Okay, what happened yesterday was a bit expected because the team had been making some minor complaints within the past 3 weeks of minor issues and prompting validators to update the software that they are using. So basically, what caused the crash, which most people are referring to it as a hack, and it's clearly not a hack, is actually bots that we are running on Radium platform for an IDO, and the bots actually caused the Solana ecosystem, the blockchain, to max out, hitting about 400,000 transactions per second, and that's actually caused the net forking, and it actually caused a clog in the network, and it couldn't create any more blocks. What that basically means was it couldn't process any more transactions. Immediately it hit 400,000 TPS.
All right, and say it didn't really impact the price much, but we see Bitcoin has reclaimed the 47,000 level. I see a lot of excitement in the market. Is it time to be excited?
I think the last one, is it?
Yeah, so I see Bitcoin has reclaimed the 47,000 level, and there's excitement in the market right now. Should we be rejoicing right now? Is the bull back on?
Yeah, the bull has been fighting strong to defeat the bear, and the bears have been trying to close us below 43,000, but they have been unable to do that. But I won't say we are 100% bullish yet until we are able to reclaim $51,000. So basically, I'm just expecting the market to keep playing sideways between 43 and 51K all through this September.
Okay. All right, Solomon. Thank you so much.
All right.
All right, looking at the top 5 gainers now, we have Aave, $392, up 19.23%. The gainers are looking good today, double-digit gains. We have Bitcoin Cash there, rebranded now to eCash. It's less than 1 cent, is up 18.54%. And Hedera Hashgraph, HBAR, 52 cents, up 17%. IOST, one of the oldies in the crypto market, up 17.16%. Top 5 losers, see Atom, $33, down 11%. Avax, $52, down 5%. And CeeLo and Algo there, $2.04, down 6.08%. So, Chimmy, it's a mixed market, but it's the bulls look like they're back in control.
I see. And looking at those numbers there that you're tracking, just wondering which of those altcoins you are bullish on, particularly we're in the midweek now.
Right. I'm still bullish on ZRX at this moment.
Wondering why.
You know, that one is one of the major laggards of the market. You know, this market, you know, buy when nobody's talking about a coin and sell when everybody starts to chatter about it. That's, you know, how I see it.
I see. Okay, we'll continue to track the market. Thank you very much, Ladi. And that's it on the program for today. And thank you for watching. I'm Chimizie Obi Iwawu.
And I'm Ladi Williams. Remember to join us for Business Incorporated at 1:30 for more business updates. That's the show today. Thank you for watching.